Good afternoon and welcome to the HEIQ PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Carlo Cinzonzo, CEO, and Xaver Hangartner, CFO. Good afternoon.
Good afternoon, Mark. Thanks for introducing us. Good afternoon, everybody, and welcome to HEIQ PLC Half-Year Results 2020. I'm here with our Group CFO, Xaver Hangartner, and we will walk you through in the next slides to the results that we have achieved in a very challenging first half-year global environment. As a start and quickly as a recap, HEIQ at a glance for those of you that need reminding. We're an innovation company. We create IP and technology, and we create innovations that enhance every aspect of life for billions of people. HEIQ was born in 2005. We listed in 2020, December. Today, we're more than 200 people worldwide in 14 offices, 7 manufacturing sites, and 8 R&D hubs. It's a very diverse and global company with 29 nationalities and 35% female leadership. We are an innovation powerhouse. We operate out of 7 technology platforms. We're very capable in scaling technology up and bringing products to market. We have 11 patent families and over 200 innovations and a very strong innovation and R&D team, which is backed up by more than 30 university partnerships that help us inform technology problems the world must master. But we're also a company that moves with the products, with the innovations from lab to consumers. We go with the technology to brands. We are brand specified. We operate today with over 300 global brands, many of them Fortune 500 companies. We offer and feature them 15 technology brands where they can differentiate their product and communicate the benefit of HEIQ's innovation at point of sales to the consumers. A strong brand force team that does nothing else than talk to brands day and night, and a very strong marketing team make this ingredient branding and brand equity build up for HEIQ possible. Now, I would like to move with you into the agenda and walk you through the highlights. I will hand over to Xaver for the financial part, and I'll meet you again for the innovation update and outlook. Quickly on the highlights. We delivered in the first half of the year 17% revenue growth. This versus the first half 2021. We showed resilience in what was a very competitive and also political half year. I remind you all, we had 3 months of shutdown of China with the lockdown that was issued in the Shanghai area. This affected our sales severely in one of our main regions, which we hope and think we can catch in the second half of the year partially. But it shows that with the 17% growth, we have continued demand for the technologies that we have already commercialized and brought to market. Very important is the clawback on the gross margin. We passed price increases towards the end of the first half of the year. They started to be reflective in our gross margin, which improved by 3% and is showing a recovery from the margin slump that we experienced by higher logistical costs and higher raw materials costs that we had faced over the last years. Now, we will see more in detail later that we made excellent progress towards our midterm target revenue goal to be a 300 million company with the different platforms, HEIQ Ionic, HEIQ Graphenix, HEIQ Symbio, a new one that we're presenting to you today, HEIQ Ecos, and also technologies that we're launching in our classical markets of textile innovation, HEIQ Mint. Now, summarizing the financials, but Xaver will give you more details. We maintained what is a strong balance sheet and a cash balance of 9.5 million. And we did this following significant investment in innovation projects and also in IT with a global ERP CRM system that we are rolling out. So a strong performance in a difficult environment in the first half year, and we think we will be able to have a strong performance in the second half year. So we're cautiously optimistic. Now the Fed in the US will drive consumer confidence. The energy availability in Europe will equally have an impact in the second half of the year. We are well positioned to manage these situations as good as it will be possible. In any case, we are on the long game, and our technology platforms are very well positioned in terms of growth and in terms of capturing market-leading ESG technology platform opportunities. Now, I would quickly like to drive into the macroeconomic environment in which we are, like all companies, navigating, and what our response to that is. Inflation. We have, as a response, enacted the price increases. There is a time lag, but we're seeing the impact of it by a recovery of marginality. Raw material prices and availability. It's improving the situation. It's still a shaky environment globally. What we have done is a proactive price management, but also a dual, and in this case, continental raw material sourcing strategy. So we are capable to source in Europe, in China, but also in the US for our key raw materials now. This gives us a good footprint, and okay, we don't have a recipe against political lockdowns like in China, but our team in China is confident that we will catch up part of what we lost in the first half year. So a lot of energy to them to run the race. Energy prices that are spiking. There is expected shortages in Europe, blackouts and brownouts that are possible. For us, the response is that for the main sales portfolio of technologies, we can switch quite rapidly the production from our European base to our US factories in Georgia and in North Carolina. And with this, we have a possibility to escape difficulties. We have a possibility to maintain operations even in a worst case scenario in Europe to supply our global customers. For the further supply chain disruptions remain possible. We have adapted by increasing the inventories strategically, also disposing them in regions so we don't have to resort to air cargo, which kills our margin. This is learning from the last year in a very difficult supply environment that the organization has been able to reflect. Continued environmental degradation awareness by consumers and customers. This is something we have experienced very extensively this year. Drought, heat waves, fires. I think everybody's aware of this. HEIQ's product portfolio is very well positioned to address some of these issues, and it's really strong in ESG credentials, but from energy saving to more sustainable materials. So we are well prepared technologically to react to this market challenge. Now I would like to hand over to Xavier for the financial performance of the first half year 2022. The floor is yours.
Thank you, Carlo. Welcome also from my side. As mentioned, we were able to increase our sales by 17% compared to the first half year of 21. And as already touched by Carlo, we have been affected by the lockdowns in China, in the Singapore area, and that if you take our sales level of roughly 1 million per month and the lockdown of almost 3 months, you see that this had an impact of 2 to 3 million on our sales in the first half year, and that's also the main cause for the lower sales compared to the second half of last year. Looking at our gross margin, you see that we were able to increase the gross margin by 3% compared to the previous half year, and that we have been able to claw back some margins we have lost, and this is driven by two things. On the one hand, we have a stabilization and increase of underlying product margins, and then we have also a favorable impact from the mix as we move ahead with our strategy to have more and more revenues also from licensing, from services and tech fee, which come in at high margin, almost 100% margin. If we look at our sales by function, as a reminder, we innovate and we bring products to market in the main four areas of hygiene, of resource efficiency, of comfort, and as well as in protection. And you see that hygiene, the largest functionality, shows a decrease of 6%, and that's basically the impact of the lockdowns in China. Most of these sales in China we have lost in the first half year are related to the hygiene functionality. You also see that we strengthened significantly our ESG portfolio, and that resource efficiency increased from up to 10.2 million, and that's including tech fee milestones we were able to recognize in the first half year related to HEIQ Ionic, but it also includes a strong increase in the area of process optimization chemicals, which is predominantly in the US, our business, as well as innovation services that we have significantly increased. If we look at sales more by the form of the product we sell, pardon, it was on too much. So we have functional ingredients, which is, for example, textile chemicals we sell, which is still the largest form, but most important to mention is the progress we made in the last category in services licensing revenues. You see that this is up over 200%, and this includes royalty, tech fees, and service revenues. If we look at the overall profit and loss statement for the first half year, we have the top line growth 17%. We have the margin at 46.7%, and this leads to a gross profit of 14.1 million. And you see that our SG&A costs compared to the first half of last year have increased significantly. This is mainly driven by the acquisitions we did in course of the first half year of 21. If we compare the costs to the second half year of 21, we see that the costs are flat compared to the 6 months at the end of 21. So overall, we have continued our strategy of investing in technologies into our commercial organization, so that we are able to be prepared for the significant steps in revenue that we aim to achieve in the near future. If we look at the balance sheet, as Carlo mentioned, we maintained a strong balance sheet with a low leverage. We are largely equity financed. The leadership team is continuously invested with roughly 23%, so we are very well aligned with all investors as a management and leadership team, and we have a net cash position of 7 million at the end of the half year. Maybe a few things to point out here. Inventories have increased. That's on the one hand strategically that we are very keen of having the right materials in the right place, so that we are able to deliver regardless of what turbulences may come or not come. So we run relatively high inventory levels as a strategy, and also we had I like to remind you that we had very strong sales particularly in November, December last year, and as such the lower inventory levels as of December 31st. The trade receivables are up over 3 million. I mentioned that tech fees we were able to recognize in the first half year, and that was mainly, or that was in late June, that we reached the milestones, and as such we were able to invoice 3 millions in the last days of the period, and these 3 millions have been collected in July, so it's rather at the point in time, June 30th, that we had a high balance. Also, the lockdown in China not only had an impact on our sales, but it also meant that the Chinese distributor partners, they were actually not able to make payments outside the country, because they had, for this, they typically need to go physically to the bank, and as they were in a very strict lockdown, they were not able to pay. So we have another 1 million of receivables outstanding as of June 30th, which has been collected in course of July. And that also explains the what we consider rather low cash balance, but still a good cash position of 9.5 million, which recovered significantly in the weeks after the balance sheet date, end of June. If we look at the cash flow statement, I mentioned the fluctuations in the net working capital and the increase in inventory and the increase as of the balance sheet date in trade receivables is kind of an investment in net working capital, which also had an impact on the number of operating cash flow, which is negative 2 million, but it includes this 4 million of working capital investments. If we look at our investments and how they come through in the cash flow statement, you see that in total we invested 4.5 million. This includes CapEx investments, mainly in the pilot plant for HEIQ Ionic in Austria, which we commissioned in the first half year, and the investments in intangible assets. This includes the global CRM ERP implementation, as Carlo mentioned, and as well as our core business innovation, R&D, and the D-phase capitalization related to that. We did not do any acquisition in the first half year, but we had earnout payments becoming due, and that's why we see there 1.5 million of investments related to acquisitions. In the first half year, with the related to Ionic, we also have, as we have achieved all the milestones related to agreed with Hugo Boss, they also paid in the first of 2 tranches of equity contribution in HEIQ Ionic, and that's basically the capital we have raised in the subsidiary from Hugo Boss. That's the $2.5 million we have collected there. The second portion of the equity investment was then coming in late July, so we see another 2.5 million after the balance sheet date coming in. Our KPIs we report every time, every half year, every annual year, as we have discussed, and you see that we also made significant progress with our R&D pipeline, with new projects coming in, with patents that we have filed, and and with products that we have launched to market. And I hand back to Carlo to take you more into the details of our biggest tech opportunities we have coming up in the next months, but also in the next years, so where we see our biggest potential. Thank you, and back to you, Carlo.
Super, thanks a lot, Xaver. And let's move into innovation and give you an update. First of all, the second half of the year and our growth strategy. There's the analyst forecast from Senkos that you can look at, and from Progressive that are published. How are we justifying our growth this year, and what's the growth drivers? It's in all 4 functions that HEIQ is informing. It's with different products that we have on market in with our HEIQ Eco-Dry, HEIQ Symbio on the carpet soil release technologies. In the protection range, we launched a new technology, HEIQ Effect SDR, which we are commercializing together with Lycra as a company. It's an elastomeric finishing technology which gives elasticity but keeps the cotton recyclable. And we have also launched our HEIQ Cool technology in the first half year more strongly, as well as for the second half year we're planning to launch the HEIQ Smart Temp Generation 7, which will give us additional sales in the comfort range. In resource efficiency, we will see later, one of the main topics is Ionic, world's first climate positive fiber. There's a healthy deal flow that is being built up by the team. Energy is at an all-time high, so HEIQ CleanTech is having more demand. With HEIQ CleanTech, we dye polyester by saving 35% of energy. So this technology had stronger requests by the market, and also in terms of energy saving, we will see later, we do expect that we can make initial sales with a new tech platform, HEIQ Ecos, which is a low emissivity technology preventing the loss of heat in buildings by insulating transparently the windows with a retrofit technology. On the hygiene range, as Xaver mentioned, we lost out in China 3 months of sales, but still in the second half of the year, a healthy innovation flow to market with Symbio, with Life Natural Botanical Peppermint, with HEIQ Mint, which is an odor control technology that we just launched, and HEIQ SandPure. We have a bunch of hygiene technologies that are taking market share, and with which we think we can keep growing this very important functionality range that HEIQ is building up. But let's come to the really exciting things. Let's come to one of our blockbuster technologies, HEIQ Ionic. This is a textile game changer. We want to replace polyester and nylon from the textile industry. Recapping, textile industry, second most polluting industry in the world, 15% CO2 emission, more than 20% usage of water, 1% recycling only. Polyester makes 70% of the entire market and takes 1,000 years to degrade. So the environmental balance of the textile industry is disastrous, and it needs urgent fix. And this is why we developed Ionic and why we created world's first climate positive fiber. Now, it's designed to replace polyester and nylon. It's made out of a biopolymer, cellulose, which is available in great quantities on waste streams, for example, agricultural waste, but also textile waste, pre-consumer from production, but also post-consumer by reconverting and upcycling old cotton that is being collected. But we can also make the cellulose with biotech by using bacteria. We produce and backwards integrate into bacterial cellulose as we speak. So very exciting feedstock sources that give us a very good CO2 profile in terms of decarbonizing, and that's why each ton of polyester that will be substituted with HEIQ Ionic will receive up to 5 tons of carbon credits that our brands can use. So if a brand wants to grow but still wants to have a climate target and decarbonize or go net zero, they can sell just more Ionic textiles and they will reach their target, something that they can't do with any other fiber in the world. It's a big market. It's a 135 billion market per year that we are attacking, polyester and nylon. It's 80 million metric tons. It's growing as we speak with more than 5%. So this is really a high urgency for the textile industry and for us as a spearhead in the innovation to change, to drive change in this market. Now, our next milestone in this are to scale up our plant. We are planning to build a Gigafactory. We did commission, as Xaver mentioned before, a pilot commercialization plant. It's based in Austria. We used for that the investment that Hugo Boss made into our subsidiary. They invested at an implied valuation of 200 million. They purchased for 5 million 2.5% of the shares of the subsidiary. They do have an option to buy other 5% for 10 million. And we agreed also on 5 million tech milestones that have come to yield. And I'm very happy to also show you here, if you look at my image quickly, not at the slide, you see the first Hugo Boss t-shirt line, the first capsule collection. So I was very happy to be allowed to present to the Hugo Boss board 2 days ago this exciting technology. I was met with excitement. There's full commitment from the entire organization, from boards to top management to management that executes the innovation on the market. And we look forward together to go to market as soon as January 2023 with the first capsule collection by Hugo Boss. So this fast track will help us to negotiate with further Fortune 500 brands. We have a healthy deal flow with a dozen bigger brands in Hugo Boss that we're negotiating. So they're bigger, so they take more time, and they're tougher in the fact that we need to go through multiple levels of management in order to get similar deal structures decided as the one that we have executed with Hugo Boss. Now we can also count on other partners in reaching our next milestones. We can count on the Lycra company, which purchased the exclusive distributor rights from us. We can count on our Swedish friends in sustainability, the company Renewcell, a listed company that is making circulose, a feedstock derived from waste textile. And we can count also on local partners, mills, for example, in Portugal, where we are teaming up to explore together with the Ministry of Economy, as well as in other European countries, economical aid for what will be our first Gigafactory. The Gigafactory, 30,000 tons, up to 300 million investment. We want to commission by 2025. So it's a very ambitious timeline for such a big plant. The plant will generate revenues in excess of 200 million per year for us. So also reminding you, our plan to be a 300 million company in the midterm. So now you can put a date on the midterm with 2025. 200 million will be coming from the Ionic Gigafactory. And we are very confident that we can execute this strategy and supply the brands that are talking to us now and that are willing to engage with us on the uptake of the capacity that we have today on plan for this technology. Again, repeating quickly as a last point, Ionic is operating in a pilot commercialization plant. We produce as we speak for the first capsule collection of Hugo Boss to be launched. And we do have an industry revolution that we're kicking off, world's first climate positive fiber to clean the second most polluting industry in the world, textile, and make it sustainable. Now let's jump on the next tech platform, which is a bit earlier on in its development, HEIQ Graphenix. HEIQ Graphenix, to remind you, is a porous graphene membrane. Graphene is the thinnest form of carbon as a layer. It's atomically thin. It's extra strongest material on Earth. It's flexible, it's stretchable, it's resistant, it's fully permeable. It's a membrane that we have created, and it's also conductive. And we have a very strong IP position on this. This is also where we have filed a further patent So here is one of the prowesses of HEIQ's innovation capability and what is an extremely high-tech application that we are informing diligently in its way to go to market. We have resolved a lot of technical issues. They're part also of the patents. They're pending, so I'm not disclosing that to you. But the R&D team has done an excellent job. We have progressed enormously, and we have also, as a big highlight, validated a new type of battery. And this is a solid-state battery, so it's not a liquid ion technology that we are informing. We are informing the next generation of battery, one where the pilot done at Swiss Federal Institute of Technology has yielded a double capacity, so we can put twice as much as energy inside while we keep the battery lighter, smaller, more compact, discharging faster, charging faster. So it's the thing that all the batteries in the future want to have. Think of your mobile phone now being charged for 2 days instead of one. Obviously, you will buy that one with this battery pack. So we're doing something important here. It's much earlier than Ionic, so we're 2 years off. But following these very successful product validations or prototype validations, we have also ordered world's first pilot commercialization plan, which is expected to be commissioned by the end of 2023, and which enables us already now to explore partnerships, joint development agreements with battery and electronic vent players, which is the 2 fields that we have selected to be the first market for us. Now, total market is huge in batteries. For example, it's 150 billion. It grows at 25% per year. So we definitely want to be a component supplier to that. We're looking for a good battery partner to team up. This is exciting times. We think we can electrify, for example, aviation, because it requires such high energy density in batteries, and this would be a big contribution again to climate and a very polluting industry, which is the aviation industry. So HEIQ Graphenix, technologically an absolute highlight for HEIQ with a big value creation opportunity. We're trying to structure similar deals to what we did in Ionic and Hugo Boss, also in this blockbuster platform. Now let's come to HEIQ Symbio, a more concrete one. Here we have sales. Here we are operating. We're selling roughly 4 million a year. We have focused a lot on putting a lot of energy into independent data. There was a breakthrough publication in the first half of the year by the key opinion leading university hospital in Europe, the Charité in Berlin. It was supervised by the Robert Koch Institute, so the highest scientific instances in healthcare. And with this publication, which was independent, so we tried to push, but we had to diligently wait. There was also an announcement already in the German healthcare industry that probiotic cleaners with our technology, with a symbiotic HEIQ patented technology that we have, are much more beneficial than disinfectants. And we have had, following that, also a strong shift on the European detergent legislation level. They will imminently change the legislation which mandated the use of disinfectants for healthcare. They will actually recommend probiotic cleaning technologies. And when that happens, we have the IP, we have the data, and the big players in the industry have started approaching us following the publication that was game-changing for us. Now, we're also growing organically here. We're bringing more hospitals on board. Our biggest distributor, Greenspeed, has accelerated its sales very nicely. We've onboarded a large facility management company, multi-billion one, which is trialing our product. So also on our small scale capability in terms of commercializing this technology by bringing the end products. We are doing the job and we're growing the sales and we're generating revenues, which we are reinvesting in our innovation. Now, to remind you quickly, the outcome of the study, it confirmed data that we had already generated. We're reducing the antimicrobial resistance up to 99.9% compared to disinfectant. So multi-resistant Staphylococcus aureus in hospitals would not occur. They can't build up with a probiotic cleaner. We reduced pathogens on the surface by 90%. We reduced the costs for the hospital to manage hospital-acquired infection consequences by up to 75%. That's a very hefty number. And we also reduced the days when people get sick of treatment that are required with antibiotics by 86%. And especially we keep the antibiotics working because we're not fostering resistance buildup. So it's a big market. It's 55 billion, growing at 5%. We're well positioned here with a green technology. And the next milestone for this green technology platform is to also diversify it. So we have done a lot of work in cosmetics, in symbiotic skincare against acne. Very positive first data. We're engaging with market leaders in cosmetic industry to do similar deals again, like we did with Hugo Boss for Ionic for this platform. We're also working in wound care. We have very good initial contacts. So you see we're moving this platform portfolio a lot into life sciences, but on the other side also into applications, for example, in water treatment, where we're replacing biocides, where we're fighting biofilm formation, where we are improving the efficiency of water purification and cleaning devices. So this is the summary here. We're going to invest next year in a larger plant in our facility in Belgium. And we're also upgrading to a cosmetic ISO standard with that so we can serve the new customer base that we are building up. Now, last tech platform that I wanted to introduce you officially is HEIQ ECOS. It's a silver nanowire technology for low emissivity coatings. We acquired that last year with HEIQ RAS in Germany. Top right, you see the image. This is silver nanowires. This is an SEM image that you see, 100 nanometers scale. And you see that we have these contact points. That's a percolation network that is created by the nanowires, and this allows conductivity. So similar technologies you have on your touch screen on your mobile phone, just that the silver nanowires are much, much cheaper than the existing market state-of-the-art indium tin oxide. And this allows us to enter a set of very interesting applications. What we can do is we can do an invisible, transparent, conductive and heat reflecting coating. On top image here, you see a window, shield a car window, where our transparent foil is applied. So you don't need to make a window with the heating wires inside anymore. You can simply put a coating on top and then electric connection, and then you can heat any window. You see that here in the image on the left with a warm window. But you can also reflect heat. You can reflect wavelengths. You can reflect radar. You can reflect infrared. Infrared is when you see temperature. Here you see a picture of myself holding the transparent foil with ECOS in my hand. You can see on the right side my temperature in all yellow, and then you go one image down and you see only half of me, and if I put the foil all in front of my face, I become invisible. This is infrared shielding, the same thing we can do for radar shielding. You see a defense application here, but we can also shield from heat loss. And this is an opportunity that has brought us to the conclusion that we need to accelerate commercialization of this tech platform. There is a rapidly rising energy price. Heat reflection becomes important. 80% of European houses have been built before 1990. Most of them have windows which are responsible for 30% of the heat loss from the building. So we can retrofit with transparent foils windows very quickly. We need very little material, and we can save up to 30% of the heat loss that is occurring in a house. And this is very meaningful. It's 7-8% of disposable income of an average European that we can compensate here in times of inflation. Also, that matters a lot. So a very interesting tech platform that we're bringing out to market, many applications. Our urgency is now on the building materials, on insulation, and we're working here with foil partners, with building company leaders with which we are informing this technology and try to make it this year with the first go-to-market. Now, if I come back from the technology platforms and we look ahead, we also look a little bit back. 2020, December, we listed. We grew our sales 100% that year. That was a forging year for HEIQ. Following the listing, we did a tech expansion year. We did 3 complementary M&As. You see 2 of the platforms that I presented, Usimbio and Ecos, are acquired. So we purchased very valuable assets. We doubled our employees. This comes with the acquisition, but it also comes with the medium-term goal to be a 300 million company. We need to invest in building an organization that will be capable to manage such a challenging growth. And we have expanded our tech base, and we also, as you saw, entered new markets. Now, the 2022 year that is running is an invest in innovation year. Ionic has seen life. The pilot commercialization plant is running. We produce fiber, we produce textiles, we produce garments. So this is a great excitement. We really have a chance to change a very polluting industry and be a disruptor in a multi-billion market. We, with HEIQ Symbio, have opened up a very strong third-party credentialing. This opens up channels to market for us that we're building up diligently with larger partners. With HEIQ Graphenix, we pushed the button on buying and acquiring the first continuous manufacturing plant worldwide. And we are in process of selecting partners also for this tech platform to go to market. And with Ecos, we have anticipated a launch. The product applications are being developed as we speak with partners, and we hope we can meet the winter so we can be a contribution to easing the energy need that Europe has. Now, 2023 and beyond, what are we going to do? You see this really powerful platforms which have a lot of value creation potential for our shareholder base. You have clearly a focus from us to invest in the next years in growth of our existing business, of our revenue generating business. We will reinvest our profits into our innovation diligently, as we have always done. We will remain cash generative. That is a philosophy that we pursue in innovation, and we will tackle this very, very big challenging product scale-ups, HEIQ Ionic, build a Gigafactory, and then also run with the very strong study from HEIQ Symbio 2 sales channels that can bring us on hospitals, for example, globally. With that, I come to the last slide, and I summarize our investment case. Invest in HEIQ to invest in impact. Our team of HEIQians is motivated to drive change with technology. We have important problems as society to solve, and we see our role as a company to be a spearhead in meaningful innovation to drive that change. We do that with a solid growth path, historically 77%. Fiscal year 2021, 15% top line. First half year, 17%. Unchanged midterm target, 300 million. 200 million will come from the Ionic plant. The other 100 million will come from the organic growth of the existing businesses that we already have been built up. At the same time, We will keep pushing our blockbuster technologies. We will keep creating new IP. It's 7 tech platforms. It's 4 blockbuster technologies, which we give an implied valuation of 400 million. It's a continuous reinvestment. Last year, 10% of our revenues reinvested in R&D, and this is our dedication to innovation. Our financial track record, cash generative operating business, that's a must. We will pay attention. Yes, we need to grow our organization. Yes, we need to grow the structures in order to be able to deliver on the promises that we have technologically to master. But this is something that we can do. We have a strong cash position that allows us the strategic execution going forward. And we are, as a management team, very committed with 23% of ownership. So we're in the same boat than you are, very dear investors. With this, I close and I move over to the...
Fantastic. Thank you very much indeed. Thank you both for your presentation. Ladies and gentlemen, do please continue to submit questions using the Q&A tab just situated in the right-hand corner of the screen. I'd also like to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Carlos, you can see we've had a number of questions through from investors, and thank you to all the investors who submitted those. Could I just ask you to start at the top, just click on that Q&A tab and just read out the question and give your response where appropriate to do so, please?
Super, I will do that, and I'll do it democratically. This time I start from the bottom. How about that? So here we have a question from Ed. 200 million revenue for Ionic by 2025, but what will be HEIQ's equity percentage of the subsidiary? So what we're doing is we let Hugo Boss in. Hugo Boss has now 2.5%. By the option for 10 million euro they can go to 7.5%. We are negotiating with other brands right now that are much bigger than Hugo Boss, 10 times bigger, and we do intend to bring 1, maximum 2 of them into the equity. So the dilution factor that we would go for at this current stage is up to a maximum of 25%. Maintaining control for the time being is essential. The board of HEIQ is discussing different options. What's the best value creation for our shareholders for what we deem to be an absolute blockbuster technology, where we put a lot of our stakes and energy and hopes on. Then I take the next question, which is from Nick. How much visibility do you have in revenue terms? Here, Nick, we have invested, that's one of the complexities. We have invested in a global ERP and a global CRM system. It's almost finished. We're trying to rush it to final. The CRM is operating the ERP in our 19 subsidiaries by end of the year. And this allows us to forecast now by account, by product, by key account manager. That's what we did for the second half of the year. So the visibility that we have is as good as it gets, I would say, in the current market situations. If there's nothing that disrupts it, we are confident that we will have a good second half of the year. Is there risks of disruptions in the market? Well, there's tons of them. You all know them, just open the newspaper. But we're an agile company, so we're very well prepared. We will take the fight where the fight must be had. Now I have Keong here. How do you plan to raise capital for the Gigafactory? This is a green technology. It's generating carbon credits. So the country that has it can put the carbon credits onto their balance sheet. There is very generous grant schemes that are enacted by different countries in Europe. So 1/3 of the 300 we expect to run with grants. 1/3 we expect to do with brands, and 1/3 we expect to do by debt. But we could also, of course, spin off for value creation, do a new fundraise. That's also something that is being discussed. We can operate with other schemes that we have identified to raise cash. The important thing for us, since we and the management are big shareholders, is we will try to keep the dilution to the minimum necessary, and we will try to maximize the uptake agreements so that we have pre-sold the entire capacity before we build the plant. Here I have a question from Ed. Have you slowed your hiring? And how probable is the need for an equity raise in the near term? So we don't need an equity raise for the running business, Ed, that we can finance because we're cash generative. Yes, we're pushing it to the edge on all sides. There's a full basket of technologies to go to market. We have invested in making the organization stronger with people. We are very careful with that. Believe me, yes, it's big steps. It's normally something that's not linear. So you invest to create the next cohort of people that can be deployed onto the many tasks that we have. So I would say we are certainly not accelerating this too much, and are very careful with that cost point and in managing it. Here I have Raphael. Why does the stock price not reflect the positive outlook of HEIQ? Well, it's a couple of innovation stories that we're bringing to market. This as an IP creation company, it is always a challenge to explain to the market what the potential of all of them is. I think the Ionic will give the market a lot of answers. Hugo Boss came in at a valuation of 200 million. Others will do the same. Uptake agreements that we hope to sign this year would corroborate not only that 200 million implied valuation, but more. So we think that by working very hard on making the technologies come through, we will make the market aware of the intrinsic value that HEIQ technology platforms have. Okay, I take OJ's question here. What is the capacity for the Ionic pilot plant? That's approximately 100 tons per year. Will this be sufficient until the Gigafactory opens? No, our brands are already complaining that this is too little. So we will try to add capacity in between step by step as quick as we can. Basically, the capacity of that pilot plant will be all absorbed. It's actually producing for the first capsule collection full time now. It's running, and we are going to try to add more capacity as quickly as we can. Here's a question from Paul B. Have you been able to reach high functionality in garments made with 100% Ionic yarn, or does it require still Lycra inside? Stretch is a very desired functionality on the market, so our partner Lycra is well positioned to deliver that with its technology, and is the market leader in the stretch and recovery field. So this is a possibility. Ionic can also be done standalone. You can make a standalone without stretch fabrics. That would be, for example, a normal polo shirt or t-shirt, but also socks or intimate apparel where you wouldn't necessarily require it. So it can be made with or without Lycra. So another question from Paul B. When are the first product lines of products that include Ionic entering the market? Well, January, as soon as January with Hugo Boss. We're working very hard together with Hugo Boss to make that happen. Then I have a question here on probiotic cleaning that we have developed with Charité. When it will be released, it's already selling. So we already have, I think, 60, 70 hospitals, especially in the Benelux area and Italy, that are purchasing. The word of mouth between hospitals is spreading. The study is very meaningful in nosocomial infectiology. So we are well positioned to see more demand in the healthcare sector going forward. Another question here: what progress has been made on industrializing HEIQ Graphenics? Are there talks with promising partners that would like to implement it? Yes, there's talks on all the platforms. We have the same approach. Let's look how we can bring the tech to market quickest, either ourselves or with a market leader. Let's bring the market leader into the technology base with royalty schemes, with equity schemes, with uptake schemes. So we are very keen on having such partnerships. Here's another question from OJ. With so many innovative technologies, do you foresee selling or spinning off any platforms into separate companies? OJ, that is a very concrete possibility. Historically, that is a maximization of value creation for a shareholder base. So our board is actively discussing these opportunities. There's always a time to do that. What's the right time? When is the highest value creation achieved that we can reach, and when do we pass it into the next stage technologically? And please keep in mind 23% shareholding of the management team. I myself am still the biggest shareholder, so I have a very high interest in the maximization of value creation and the minimization of dilutive factors. Okay, another question here from Paul. How much of the Ionic equity are you planning to sell overall? Will you keep a majority? Yes, we will keep a controlling stake there. For now, the plan is to sell a maximum of 25%. Another question here. Has there been progress on the promised development of new HEIQ Ionic partners? There has been progress. Again, we took Hugo Boss, the Hugo Boss win that we did. We took that to much bigger brands, like 10 times Hugo Boss brands. And obviously, the negotiation at bigger companies takes longer. There's just many more layers of people that need to be pierced through, and we are diligently leading that process. We're diligently creating the opportunity for deal flow with larger brand partners. When do you think that HEIQ Ionic will start impacting revenue substantially? It is starting to do that by meaning of milestone tech fees that we are making as part of the innovation services that we're signing off with the brand partners. So there is a component that is running there. There will be first sales from the pilot plant. They will not be in the million size yet. We will need to add capacity, but always the philosophy at HEIQ, we try to make money with technology as quick as we can. It's just a very good diligence to bring products to market and position them with customers so that they can be validated in a real case scenario. Okay, I have a question here from Ed. If you did sell a subsidiary, could you factor in a royalty model to protect us against long-term success, i.e. against selling too cheaply? Ed, definitely one part of the strategic thoughts that we have for Ionic, for example, is to build one Gigafactory ourselves and then move into franchising. This would mean that we are giving out for royalties a franchise license to transfer technology, to transfer brand, potentially even to create a platform with large partners in the banking industry to give financials to build plants in Indonesia, in China, in Bangladesh, etc., so that we can be on site with our customer base and have a localized manufacturing. I remind you, it's 80 million tons of polyester that we need to substitute. We're building a 30,000 ton plant. It's a drop in the ocean. We need 2,500 HEIQ Ionic plants to replace polyester. 750 billion total investment on the world. So you see, it's quite a magnitude of what we're attempting to disrupt as an industry. Okay, here a question. Have you been able to reach high functionality in garments with 100% Ionic yarn? Yes, we took that. Yes, we can. It's a very high functional yarn. Our mill partners and brands are excited about the opportunities that it is giving. And when do you think HEIQ Ionic will start impacting revenue substantially? We had that, so it's already started. When are the first product lines of Ionic in market? That's in January. You had that. At the IPO, you had a medium-term target of 300 million. We still do. and what's stopping the business from achieving this faster? Well, we are in tough environments at the moment, and the teams you see has two jobs. We have offense, where we are bringing these new tech platforms to market. They will add substantial value to our share, so we're very keen to do that. They are future technologies that are in need. And we're also playing, if you want, defense. We have an existing product range on the market that we need to grow organically. So we're playing both missions at the same time diligently. And obviously, we're controlling how many people we hire, so we only have that many we can put on both missions to keep everything in balance. And what's here? Last question, Hugo Boss, Ionic, you said that there are other partners. Yes, there are other partners. And we're working very hard with business development to make them come alive in a short time frame. It's 2 o'clock.
Perfect timing, Carlos. Ever, thank you very much. As ever, you've asked every single question we've had through. And of course, if there are any further questions that do come through, the team will be able to review those, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Carlo, just before redirecting the investors to give you their feedback, if I could just ask you for a few closing comments, please.
Invest in HEIQ, invest in impact. We're out to disrupt some major industries. Our team is very motivated to achieve that. We have an opportunity that is rarely given to tech companies to really bring better technologies to market, and we strongly and firmly believe that only with better technologies we can create a better world. So thank you very much for your attention, and I'm looking forward to meet you all again after the closing of the second half year.
Fantastic. Carlos, Ever, thank you again for updating investors. Could I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete, and I know it's greatly valued by the company. On behalf of the management team of HEIQ PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon to you all.
Bye.